Hi, folks. This past week, Wall Street blinked. Markets pulled back, inflation worries crept in, and the Fed still not cutting rates. At the same time, your inbox and the headlines probably screamed, tariffs, recession, correction. But here's the question no one's answering. What does it actually mean for your portfolio? And more importantly, what should you do about it? Stick around. In the next few minutes, I'll walk you through what just happened, what's coming, and how smart investors are positioning right now while everyone else reacts. Because if wealth is your goal, you need to think different. Wall Street wants you chasing the noise. We don't do that here. We own great businesses. We manage your plans. And this week, behavior, not earnings, was what moved the market. So let's break it down. The S&P 500 slipped about 0.3%. Nasdaq barely moved. The Dow lost 1%. The headlines blamed Trump's new tariff threats, 35% on Canadian goods. Letters sent to 20 countries warning of 15-20% duties if they don't make trade deals fast. That spooked global markets, ticked up Treasury yields, and revived inflation concerns. But let's be clear, this was not a panic. It was a pause. And the sectors told the story. Energy rallied as oil bounced. AI tech kept pushing higher. Nvidia hit a $4 trillion market cap. Banks treaded water, all eyes on earnings next week, which brings us to the real story. Next week is make or break for financials. 6 major U.S. banks report earnings. JPMorgan, Bank of America, Citi, Wells Fargo, Goldman, and Morgan Stanley. Here's what I'm watching. Net interest margins. Are they still widening, or has deposit competition caught up? Credit quality. Are charge-offs ticking up, or is the consumer still paying their bills? Loan growth. That's your leading indicator of business confidence. And of course, buybacks and dividends. Will they hike dividends and resume buybacks after passing stress tests? If they come in strong, financials could lead this market higher. If they stumble, expect volatility. In our value-aligned portfolio, we're holding high-conviction names like Markel, MKL, and Kinsale, KNSL, cash-rich, disciplined underwriters that print profits in this rate environment. Let's talk about how our companies performed. AMD jumped 6.2%. HSBC upgraded it, saying it could challenge Nvidia in AI chips. That's no small thing. Merck, MRK, rose 3%. They announced a smart $10 billion acquisition to strengthen their pipeline beyond Keytruda. That's the kind of forward-looking move we love. Accenture, ACN, fell on leadership changes. But we're not chasing headlines. Accenture has been through many pauses in corporate IT spending, only to retool to profit from the next wave. We see no reason that artificial intelligence will not be the same, but only bigger than the previous technological innovations. It plans to revamp its growth model, effective Sep 1st, with a heightened focus on generative AI solutions and ecosystem partnerships. Meanwhile, companies like AutoZone, Apple, Home Depot, they drifted. But guess what? We're not trading catalysts. We're building wealth by owning great businesses through cycles. Now zoom out. Here's what's coming next week. CPI inflation report, Tuesday. Expected to rise to 2.7%. If that print is hot, don't be shocked if rate cuts get pushed back. Fed speakers go quiet after Wednesday, but their minutes this week made one thing clear. They're not cutting rates just to make the White House happy. So if inflation ticks up, rates stay higher. What wins? Quality businesses, cash flow generators, capital-light compounders. That's what we own. Here's the truth. Markets dip. Markets recover. But most investors, they react. They sell when they should be holding. They wait when they should be buying. This isn't opinion. It's math. The best returns come from staying invested and staying aligned with your plan and your portfolio. So if you're feeling uncertain, if you're wondering, is now the time to take profits? Do I own businesses or just a bunch of funds I can't explain? Let's talk, because clarity is the first step to peace of mind. Subscribe for weekly breakdowns, hit the bell so you don't miss next week's CPI plus bank earnings reactions, and share this with someone whose portfolio needs real alignment. I'm David Berkowitz with ValueAligned Partners. Stay the course, stay invested, and stay confident.